Trump hits the Fed, Bitcoin dives 4%, $500 million wiped, yet Ether flirts with a record high. Which side are you on? Welcome to your daily 5-minute crypto brief with Satoshi and Nova. Today is August 31st, 2025. I am Nova.
I am Satoshi.
Bitcoin. It nudged up slightly. Around $109,000. So a modest, 0.6% gain?
Yeah, just a touch. But Ethereum, that really stole the show. It outperformed quite strongly, a solid 2.6% rise, pushing it near $4,475.
Okay, and what about the altcoins?
Most were kind of flat or maybe slightly up. XRP, I think, was up 1.2%, Dogecoin 0.9%, though you did see some meme tokens like Pepe slip back a bit, maybe 0.7% down. Overall sentiment, I'd say, cautiously optimistic, despite some undercurrents.
Right, those undercurrents. Let's talk about that. The Fed seemed to be sending some mixed messages, yeah.
Oh, incredibly mixed, yeah. So you had Governor Christopher Waller suggesting, maybe supporting a 0.25% rate cut mid-September. He hinted at a cooling labor market. But then almost immediately you get President Trump's really unprecedented attempt to fire Fed Governor Lisa Cook. And that just injected serious political uncertainty,
Yeah.
Kind of clouded those dovish hopes straight away.
Wow. Okay. So with those unsettling signals, that political stuff brewing, how did the crypto markets actually react? And where did investors maybe look for safety?
Yeah, that's exactly where it gets really interesting. We saw a pretty sharp crypto pullback. Bitcoin, for instance, it fell quite abruptly, nearly 4% intraday on August 29th. Dropped from $112,000 down to $108,000.
Oh, and that triggered liquidations.
Big time. Over $500 million in leveraged liquidations across the exchanges. Basically, forced closures of highly borrowed positions as prices fell. It just amplified the whole downward move. It felt like a classic macro-driven correction, not really about crypto fundamentals.
And the safe havens.
Right. So in that sort of flight to safety, traditional assets, especially gold, climbed. Gold hit $3,423 an ounce, and it was up about 3.9% for August overall. It's not just a small shift, it's a really stark reminder. While crypto wants that digital gold narrative, during times of high macro ambiguity, traditional safe havens often still rule the roost, at least short term.
That's a really powerful point about the macro influence, yeah. But okay, despite that turbulence, Ethereum still managed to hit an all-time high, briefly, you said.
Yeah, it did. Briefly touched $4,950 right around August 24th, 25th. And this seemed largely fueled by, surging institutional inflows. We saw Ether ETFs adding roughly $307 million in just one day on August 27th.
Wow, $307 million in a day.
Yeah. And that brought the total to about $1.83 billion in just 5 days. BlackRock's fund was leading the charge there.
That rapid inflow into ETFs is it's remarkable, isn't it? Does that make Ethereum's price maybe more susceptible to the same kind of macro volatility we just talked about with Bitcoin, or is something else going on?
That's an excellent question. I mean, no asset is totally immune to macro, all right? But what we might be seeing with Ethereum is this convergence, its utility, as a base layer for DeFi, plus this clear institutional hug through the ETFs. And this brings up an even bigger question, maybe about stablecoins. How are they integrating? Quietly, but profoundly.
Okay, like what?
Well, look at MasterCard partnering with Circle. They're enabling merchants across Eastern Europe, the Middle East, Africa to settle in USDC and EURC, real-world use. And at the same time, fintech giant Finastra. They're integrating USDC into their massive $5 trillion daily payment network.
$5 trillion daily.
Yeah. So what this shows isn't just, new payment toys. It's like a fundamental re-architecture starting to happen. Traditional finance is actually leveraging crypto's efficiency as a utility layer, moving past just speculation.
Powerful shifts, absolutely. But wasn't all smooth sailing, was it? Heard something about Binance?
Right, yeah. Can't forget that Binance, the world's biggest exchange, they had a brief 25-minute outage. It was on their futures trading platform, August 29th. They resolved it quickly, thankfully. But yeah, it's a stark reminder, isn't it? Operational risks are real.
Absolutely. Even the biggest players aren't immune to the occasional hiccup. Like my Wi-Fi router sometimes, it really underscores that critical need for active risk management, system reliability.
Totally agree. So if we sort of connect all these threads, you've seen a week where you've got encouraging stuff like ETH adoption, stablecoin integration, pushing digital assets into the fabric of global finance. But at the same time, this whole system is still intensely susceptible to those older, more powerful currents. Fed policy, political uncertainty.
So, boiling it down, what does this all mean for you, trying to navigate this? The key takeaway isn't just simple volatility or simple growth, maybe. It's crypto's undeniable, if sometimes bumpy, transition from maybe a speculative niche towards being an essential, interconnected part of finance, right? Subject to both its own drivers and these broader currents. So stay informed, stay agile, manage those position sizes, maybe, and be ready for sudden swings.
Exactly. And as we head into September, here's a thought maybe for you to mull over. If these global payment giants, these leading digital assets, are increasingly seen as almost foundational utilities, how does this accelerating integration into traditional finance reshape your understanding of its long-term potential, especially when you contrast that with its, clear short-term vulnerability to political and economic wobbles? Something to think about.
You've seen the crypto headlines. Now get the signals that impact your holdings. Money.ai scans 1.3 million signals a day, from token prices to Twitter sentiment, and gives you one personalized briefing. No hype, no noise, just your crypto edge. Download Money.ai. Stay ahead.